Okay, hi everyone. Welcome to today's webinar. Today we are going to be doing our pre-market analysis. So let me know if you guys can see me and hear me. And then we'll go ahead and get started. Okay, if it's all good, yeah, let's go ahead and get started. So, okay, as per usual, a disclaimer. IC markets global does not represent that the material provided here is accurate, current, or complete, and therefore shouldn't be relied upon as such. Risk warning: trading forex and CFDs carries a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Please read and ensure you fully understand our risk disclosure. Okay, so here's our agenda for today. We're going to look at analysis on a couple of FX majors first. I see some of you guys already requesting for some Forex majors, so we'll go ahead and look at those. And then we'll look at commodities, cryptos, and indices. And lastly, any custom requests as well. Okay, so I'm your host for today. I'm Melanie, and I'm an investment analyst from Rocket, who were finalists for Best FX and Equity Research in the years 2019 to 2021, specializing in technical analysis with a focus on Fibonacci retracements, extensions, and projections. Okay, so let me just pull out my charts and then we can go ahead and get started. Okay, before we get started, let's take a look at this week's fundamental events. Okay, let's first take a look at this week's events. So there are a lot of economic calendars out there that you can use. I just prefer to use Forex Factory. Okay. Okay, just okay, can everyone see my screen? Okay, great. So I normally just like to use Forex Factory, but if you prefer, there are many other kinds of free economic calendars that you can use. So since we're looking at this week's events, I'm just gonna click on this week's dates, apply settings. Okay, so here you can see I have it filtered to only look at the orange and red icon events. These are basically the medium to high impact events. And if you click on this green icon here, we can look at the low impact as well as the non-economic events for the week as well. You can also filter out any event types that you're specifically looking at, any currency types that you are specifically trading as well. Apply filter and you can see we have a lot more events to go through. So that's why we normally just look at the medium to high impact events so that we are able to focus on the events that will have the greatest impact on our charts. Okay, so so for today we have China's GDP and industrial production. Okay, both of the values are forecasted to be lower than the previous. Then tomorrow we have US Fed Chair Powell speaking, Canadian CPI data, US retail sales, and on Wednesday we have Kiwi CPI, UK CPI data as well, and US building permits, industrial production, and we have an FOMC meeting as well. Thursday we have employment change and unemployment rates in Australia. UK is claimant count change and average earnings index. And then we also have Euro's main refinancing rate, monetary policy statements, and US unemployment claims, US Philly Fed manufacturing index, the ECB press conference, and on Friday we have UK retail sales and Canadian retail sales data as well. Okay, so now that we have that, let's now take a look at our charts. Okay, okay, so let's first start off by looking at our weekly time frame. Okay, I'm gonna start off by looking at DXY. We do have, yeah, we have a request on DXY, so I'm gonna start off with DXY, and then we'll go on to our other requests after this. So in our weekly time frame, you can see, I like to start off on the higher time frame so we get an idea of the direction that prices are headed towards. So, um, on our weekly time frame, we can see prices are kind of ranging over here. And on our daily time frame, oops, can you guys see my charts? Yeah, okay. So on our daily time frame, okay, you can kind of see prices moving in a downtrend right now. Okay, so prices are recently moving in a downtrend since price has recently broken out of this ascending trend line. Okay, I'm gonna try and see if this is a trend channel as well. Okay, yeah, it's also kind of a trend channel. So just to recap, what makes a valid trend channel is if there are at least two touches at the top and at least two touches below. What makes a valid trend line is if there are at least three touches, which you can see we have here. Okay, so it's pretty bearish in my opinion, since price recently broke out of the ascending trend channel and the ascending trend line. Okay, now let's take a look at our 4-hour time frame. Okay. So now for our time frame, it's a little bit more obvious that the prices are moving in a downtrend. Okay, so now let's go ahead and add our support and resistance levels. Okay, so I'm gonna start off with resistance. Okay, so this is where I'm gonna place my first support. Okay, my pivot, I'm just gonna place it at this multiple swing lows. Okay, now that I'm done with my horizontal levels, I'm then gonna go in with my Fibonacci levels. Okay, so you can see my 78.6 and my 61.8 line up nicely with my pivot and first support. So I'm just gonna keep those two. Okay, I also have a projection here. 78.6 lines up nicely. I think my 100% as well. So with Fibonacci, your levels don't have to line up exactly in line with the horizontal levels. As long as it's kind of close to it, that's good enough. Reason being, we are looking for areas, confluence areas, more so than specific levels. So what confluence areas are is basically when two or more Fibonacci levels line up in the same area. Prices tend to be attracted to those areas more, but might not be able to break out of them. So yeah. Okay, I think that's all the levels that we have. Um, yeah, I think so. So let's now look at some indicators. I like to start off by looking at Ichimoku and MACD because at one glance you can see exactly what these signals are. Okay, so prices are moving below the Ichimoku cloud. They are also moving in a bearish signal on our MACD. So both are giving us bearish signals and they both support our analysis that price is going to continue to drop. Okay, let's now look at RSI. Okay, we can see RSI moving in a downtrend as well. So that also supports our analysis. Okay, let's also take a look at stochastic. Okay, stochastic isn't having as much here. Yeah, I think that's it for DXY. So we will go for a sell from our pivot towards alpha support here, especially since this is a confluence area here. Okay. Okay, someone asked which kind of trading style tends to be more consistent? I'd say consistency depends mostly on um like psychology and your own trading style, which one works best for you. So I can't really say a specific type. It's more whether you are interested in, short term or long term gains. So like if you are a scalper, that would be you'll profit from like small changes. So if you're a swing trader or day trader, then you would have to execute multiple trades over a longer period of time. So it really depends on your own trading style and what works best for you and around your schedule. So yeah, I can't really answer that because most charts, or rather all charts, are different. Yeah. Okay. Let's now take a look at. Okay, yeah, we can take a look at gold. Okay. So again, I'm starting off by looking at the higher time frames. So on our weekly time frame, we see prices moving in this uptrend. In our daily time frame, okay, we also kind of see it moving in an uptrend as well. Okay, we have prices kind of approaching this resistance here, this swing high, double swing high here. Okay, now let's look at our 4-hour time frame. Okay, so now at our 4-hour time frame, we still have that swing high here. So that's where my first resistance is gonna be. I'm gonna place my pivot uh, quite close to that. Okay, I'm gonna place it over here. And actually this, I'm gonna replace it with a um, intermediate resistance instead, since it's pretty close to where price is currently at. Okay, and then for my first support, I'm going to place it all the way down here. Okay, so now I'm going to use my Fibonacci levels. Okay, my 61.8 lines up. Okay, no, because price has already broken out of this level, so it's no longer valid. Okay, let's see. Okay, you can see our 161 lines up nicely with our pivot. Okay, so for the 161 levels, we're basically looking at a Nike tick shape. Um, yeah, so just basically this shape. If it's inverted, it will look like that. Okay, and for this technique, we're mostly looking at the levels that are greater than 100. Okay, and for retracement, you can see my 50% lines up with my first support. Okay, now as for my projection or my resistance, I'm gonna use the projection. Okay, so for projection, we are basically using this lightning bolt kind of shape. Something like this, or like a flash shape. And we're using 61.8, 78.6, and 100%. So that's where I'm going to place my first resistance, just above this 100%. And you can see the 78 also lines up with our intermediate. So I'm just going to keep those two. Okay, I think that's all the levels that we have here. So we are going to go in for a buy once price breaks out of this area here towards our first resistance, but keeping in mind that of this intermediate resistance level that's in line with two swing highs and also in line with this 78.6 level here. Okay, now let's once again look at our indicators. I'm gonna look at Ichimoku and MACD first. Okay, our price is moving above the cloud, so it is giving us a bullish signal. You can see MACD is also giving us a bullish signal, so they both support our analysis. Let's look at Bollinger Bands. Okay, you can see the Bollinger Band is price is pushing above the upper band of our Bollinger Band, so it's giving us a bullish signal as well. We look at RSI. Okay, you can see RSI is also giving us a bullish signal. Okay, yep, that's it for gold. Okay, so since we've just gone through DXY and gold, I'll just briefly mention that they tend to be, okay, let me show you. So we just looked at gold here, right? But if we compare it on the same price scale as DXY, we just looked at, okay, I'm not sure if it's really clear here, but you can see that whenever there are dips in price of gold, there tend to be the opposite effect will happen for DXY, oftentimes. So that's kind of how you can use these medium to high impact events for throughout the week when it comes to your trading. So for example, if we're looking at unemployment claims for US, if they turn out to be as forecasted, they are higher than previous. Of course, that is I guess it's kind of a bad sign for the US economy. So you can expect the DXY to drop slightly. Of course, this will work on our lower time frame, so maybe an hour, 30 minutes, maybe 15 minutes, but we won't go anything below 15 minutes because it tends to be a little bit noisier on the smaller time frames. So on the shorter time frames after the data is released, which would be 10:30 my time, okay, you can, if the DXY drops, we can expect gold to rise, or vice versa. So yeah, that's just how you can use how you can use news in your charts to trade your charts as well. Okay, but again, that works mostly on the shorter time frames. Okay, so we're done with gold. Now I'm gonna go through some of the forex pairs that you guys have requested. Yeah, I'm just gonna go through as many as we can in the time that we have left, and then yep, we'll just go ahead and see where we are. Okay, I'm gonna go ahead and do pound dollar. Okay, so let me just clear my charts. Hmm. So on our weekly time frame, okay, you can see prices kind of moving in this uptrend. On our daily time frame, it is also giving us a kind of an uptrend as well. Prices look like they are approaching the swing high here. Okay, and now on our 4-hour time frame, you can see that uptrend a lot clearer as well. Okay. Okay. So I'm gonna go ahead and place our first resistance all the way up here at the swing high. My pivot, I'm just gonna place over here. And as for my first support, let's see. I just place it here. Okay, at this level here. Oop. Okay, now I'm gonna go in with my Fibonacci levels. Okay, my 100% lines up. Again, let me draw out the shape for you here. Okay, it's like a lightning bolt flash kind of shape. Let's see. Okay, so 61 is no longer valid since price has already broken through. So I'm just gonna keep the 78 and 100 for now. And I'm also gonna go in with my Nike tick shape. Okay, my 161 lines up with the 78.6. So I might add an intermediate level here as well. Okay, now let's go in with a retracement. None of these levels line up. Okay, my 78.6 lines up with my first resistance. Yeah, I think that's all the levels we have. So we are gonna go in for a buy here following the uptrend. If we look at Ichimoku and MACD again, price is moving above the cloud, so it is giving us a bullish signal. MACD is also giving us a bullish signal. So yeah, both support our analysis. Okay, maybe let's look at RSI as well. Okay, RSI is also giving us a bullish signal. Bollinger Bands. Okay, price is also pushing above the upper band, so it's also giving us a bullish signal. Okay, so that's for pound dollar. Okay, I think we might have time to do one more. So let's look at AUD. We do have a request for Kiwi as well, but I just want to briefly go through AUD really quickly, and then we can look at AUD Kiwi as well. Okay, so on a weekly time frame, you can see that's kind of bearish. Okay, although there is a slight uptick recently. Okay, so on our daily time frame, we can see it is quite clear. Price is moving in an uptrend here. Okay, towards this swing high here. Oh, all of these swing highs. Okay, now on our 4-hour time frame, that's gonna be my first resistance. My pivot will be here. Okay, sorry about that. Next, I'm gonna place my first support here at this swing high. Okay, and then I'll place my, I'm gonna go in with my Fibonacci levels. Um, okay, my 161.8 lines up with my pivot. So the Nike tick shape is again here. Mm, yeah. No, none of the levels line up. Can look at our retracement here as well. Okay, not really as well. Um, okay, my 23.6 lines up. Okay, no. Okay, so I think that's all the levels that we have here. So before I move on as well, I just wanted to quickly mention Kiwi since we might not have time to go through it. So Kiwi and Aussie tend to be positively correlated. So let me just show you guys. this Forex correlation table. So you can check all of the positively and negatively correlated values here. We normally will look at minus 80% and 80% so that we find the most correlated values. So you can just input that into these boxes, look at your relevant timeframes, and then you'll highlight the most correlated values. And Kiwi and Oz tend to be one of them, as you can see over here from the charts. So yeah, I just wanted to briefly mention that. So now let's look at our indicators. Now look at Ichimoku and MACD. So prices are moving above the cloud. MACD is also giving us a bullish signal. So both support our bullish analysis, and we're going for a buy from our pivot towards our first resistance. Once again, keeping in mind that this is a multi-swing high, and it's also in line with a 161.8 Fibonacci extension. Okay. Okay, I think that's all the time we have for today. Thank you guys so much for joining me. I hope you guys found this session helpful, and have a great rest of your week, and I'll see you guys again next week. Thanks, everyone. Bye. Thanks, guys. See you guys.